This YouTuber claims he will use this power level scalping strategy for life, but can it pass a prop firm challenge? Let's find out. My name is Eddie Pips and I'm on a mission to test trading strategies to see if they truly stand up to the prop firm challenge. Before we get started, if you have a strategy in mind, drop it in the comments. I'll try to test it. Let me break down how this works. I find a trading strategy, I pick a random month, I backtest it trade by trade using FXReplay. We track wins, losses, drawdown, and whether it hits the prop firm's rules. Some strategies will pass a prop firm challenge in a few days, and some might fail in less than a week. We try to test a whole month or more until either profit target is hit or drawdown is. So let's find out if this power level scalping strategy can pass a prop firm challenge. Let's dive right in. So the rules are fairly simple, okay? We're using the 15-minute time frame for context, and we're using the 1-minute time frame for execution. So what he says to do is to grab a vertical line here, so the vertical line, and mark out 6 p.m., midnight, and 6 a.m. This is going to be your Asian session, and this is going to be your London session. These are our power levels, the high and the low of the Asian session. So from 6 p.m. to midnight, you're going to mark out the high and the low. And from midnight to 6 a.m., you're going to mark out the high and the low. Essentially, what we're waiting for is at 9:30. Now, the confusing part is he doesn't talk about what his execution window is, but I'm going to safely assume that it's going to be between 9:30 a.m. and 11 a.m. because that is where most of the volatility in New York session is. So what we're doing is we're waiting for 9:30 a.m. to open, and we're looking for the high or the low to be taken out on one of these, what he calls power levels. Let's go over a bullish example. So here, the London high has already been taken out, and so has the Asian low. So we have our Asian session high and our London session low extended out. What we're doing is we're waiting for a bullish example. We are waiting for the low of London to be taken out. So we're going to drop down onto the 1-minute time frame, which we're using for execution, and we're going to play price out until it takes out the London low. And here you can see we have the London low taken out. So what the entry model is an inverted fair value gap. If you don't know what a fair value gap is, I actually have a video on it. I will leave the link in the description so that you can understand what a fair value gap is. Now, what we're doing is we're not trading off of a bullish fair value gap here for buys, which would essentially be right here. What we're doing is we're looking for a fair value gap, a bearish fair value gap that actually fails. So you can see here that we have this bearish fair value gap, the most recent bearish fair value gap, and price to close above that fair value gap. This gives us our inverted fair value gap. And we are actually going to market execute as soon as price closes above that bearish fair value gap. And what we're going to do is we're going to target this high here. Since London high here has already been taken out, we are going to target the most recent high. And we're going to play price out. Almost hit stop loss. And you can see here our take profit has been hit. Now let's go over a bearish example. Same thing. We're marking out 6 p.m., midnight, and 6 a.m. This is our Asian session. This is our London session. We're marking out the high and the low of the Asian session and the high and the low of the London session. We're extending out the high of the London and the Asian session because the low of Asian and London session were both taken out. For a bearish example, we are waiting for the London or the Asian high to be taken out. So let's go ahead and see if that happens. We're going to drop down onto the 1-minute time frame again for our execution. And here, as you can see, we actually had London high taken out. Now again, we're looking for that inverted fair value gap. So our most recent bullish fair value gap is right here. We extend that out, and we're waiting for price to close below that bullish fair value gap. And as you can see here, it does, which gives us our inverted fair value gap, and we are market executing. And since, again, the London low has been taken out, we are going to target the most recent low that makes sense. So here we have a 4RR trade, and we're going to play it out to see if it wins. And as you can see here, it hits to take profit. Now, let the back testing begin. All right, here we are creating a new session. The name is Power Level Scalping Session. We are trading MES. Here, it has to be minimum 2019, so we're gonna pull up ChatGPT, pick a random month and year after 2019. August 2022. Create session, and here we are. I'm going to make things a little easier since we already know the times that we need to pay attention to the highs and lows of. I have this session indicator NY by FXReplay, and here I am going to put PM, which is 1800, and then we are going to do midnight, and then we are going to do from midnight to 6 a.m. Boom, and you can see here it draws those areas out for us. Here you can see 6 p.m. to midnight, and then midnight over to 6 a.m. And another thing that I'm going to do is right here where it says go to, I'm going to hit custom settings, and next day open settings I'm going to put as 9:30 a.m. because that is the time that we trade at. And let's go next day open, and it takes us right to 9:30. And it looks like the first day the high is already taken out of London, and so is the low as well as the Asian low. So the only thing that we have to take out is the Asia high, but let's get started. All right, so as you can see, unfortunately, the prop firm challenge was failed. We're going to go ahead and we're going to view the analytics over here. We're going to view the analytics on I created a backtesting software, Edge Finder, so that it makes it easier for me to track these prop firm challenges. So we'll go ahead and review these analytics, and then we'll also review the analytics on FXReplay. I was really hoping that this strategy would work because it was so simple. You literally marked out a few levels, you waited for one of them to be taken out, and then you waited for an inverted fair value gap. Absolute ease. That's what everybody wishes in their trading strategy. Unfortunately, this just did not follow through on his promise, and the title of his video was, I'll be using this for the rest of my life. And you can see the equity curve, lots and lots and lots and lots and lots of downs. The max wins in a row were only 2. 10 losses in a row, guys. 10 losses in a row. The max drawdown was obviously 10% because that's what the FTMO 5%ers, all those allow you to have, is a 10% drawdown. We did hit that. So the win rate was 20%. It almost seems as though if you did the opposite of what this strategy's entry rules were, you would have made a lot more money. You can see the equity curve. Now, the thing is, this strategy had some really good wins. There was one that hit for 6%. There was one that hit for 8%. And that was absolutely fantastic. But you can see here that there were just so many losses here. This is not for the faint of heart. This is not for the weak. So unfortunately, we just did not pass. Let's go ahead and take a look at this here. I also have this software printing out an image. So here you can see the win rate was 20%. The average RR was 4%, which is fantastic. But unfortunately, the drawdown was 10%, and you will not pass a challenge with this, at least during the months that I tested. Let's see here the months that I tested. The date range was from August to December, guys. Almost 4 months for this strategy to fail. which kind of sucks because if you were using this strategy during the time period of August 2022 to December 2022, you would have wasted 4 months trading this strategy and not have passed the challenge. Actually, you know what? It did pass the first step. It did pass round one. But unfortunately, round two completely demolished. In that 4 month period, we had 45 trades, and only 9 of them were winners, and 36 of them were losses, unfortunately. Here you can see the best win was 7.83%. That's what I had said earlier. It did have a nice large win, and it had like 2 or 3 of those. But yeah, here you can see the monthly breakdown. In August, we did make almost 3%. September was close to break even. October, we made almost 8%. And then we just, that was when we passed the first step of the challenge. And then here you can just see 2 months in a row we had negative months. And that's unfortunately what caused us to lose step 2. But here you can see again, let's go over the monthly. We started in August. So you can see all the losses and all the wins here if you want to pause it. Let's go over to September, all the wins and all the losses. October, all the wins and all the losses. November, all the losses and the 1 win. Oh, and December, all losses. So, unfortunately, I did not like this strategy at all. There were some confusing parts. One of the things that he did mention was when, for example, during a sell, when the London high is taken out and you get that inverted fair value gap, you go ahead and enter once that bullish fair value gap is inverted, and you target the London low. But what happens if the London low is already taken out before your entry and now it's a further take profit? Like, are you still targeting the London low or the low that was created after the London low was taken out? So, but thanks for watching, guys. I would stay away from this strategy. Now, the thing is, Casper is an absolutely fantastic mentor, and I don't want this to be an example of what he can't do. But this strategy it's just not it, guys. Not it at all.